Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Thursday the 23rd of November 2017. Happy Thanksgiving to our American friends, and because it is Thanksgiving today, the markets are obviously going to be quiet. So I just thought I'd do a little bit of training on a potential setup. What we've got is a forward chart of the CAD Swiss. We've got this level of support. It's super well defined. It's been touched twice. Now, as you can see, it's come close to it, but it hasn't quite touched it. And what you'd want to see is you'd want to see price actually come down to the level, and then it would be really nice if it went actually to the bottom end, so it was perfect like that, and then you then had a bounce of sorts. Something like an engulfing candle would be cool. Maybe several candles, 2-3 candles is great. And what this is acting as is that entry cheese at the hard right edge, right? And all these traders would know is what they are witnessing in that moment, and they are then thinking to themselves that this is a triple bottom, and a triple bottom, by anyone's standards who trades the level, is an entry to go long. From that, those traders will place their stops just below the level like that. And there's potentially traders still in here from that previous move, because if you look at that range, it didn't go across the range and like the previous moves, and notably look at the way that it failed. If you were long in here on that second touch, you'd be pretty happy about that move, and then it would pull back and you'd be accepting of that, and you would see this little retracement and think, oh, here we go, we're off to the races. Obviously that's just a wick on this time compression, but on a lower down it would have been some closes, positive closes. So therefore, comfortable in the trade, and then boom, spanks them. So there's a degree of traders being caught in the headlights there, and if they place their stops below that level, which is what they would do, they'd be hoping for the trade to follow through, and it's kind of fizzled out back to the level, and it bounces. Then that encourages new traders in, so you get not only the stops from these traders that are still remaining because of the fact it didn't reach a decent distance across the range, and the fact that failure was such that it would catch them. That little bit of objectivity that you lose in a trade when you're in a trade. You do want to hold on. You've had some money. The psychology of that is, you had some decent profits. You hope the retracement would work, and then it just absolutely reverses hard against you. It's one of those types of moves that will catch a trader, and ultimately they will remain in those positions. And as I say, those stops are still there, or a portion of them are. Obviously not everybody would have remained, but some will have done. So that, as I say, there's that carryover effect. So you get the additional stops from people going long off the bounce, and then obviously you have the carryover. So net what you've got below there is an awful lot of sell orders just sitting below the level, and so the traders go long, hoping it will follow through. And what you'd want to see from there is basically something akin to a big strong drop down through the level like that. Now it has a couple of purposes. As it does that, it obviously stops those traders out, but it also encourages breakout traders to come in, because a breakout trader loves nothing more than a level, especially one that's so well defined and being touched several times, to get involved when that pops, because they believe that that's going to be a decent move. The next thing you would anticipate is a pullback to the level, or somewhere near the level. Obviously at the level's nice. It just, it just highlights where the traders are, right? It highlights that these traders are being stopped out, along with these guys. Stopped out, breakout traders are coming in. What is this doing? It's more selling. So selling with the stops, selling with the breakout, selling with the retracement trade, and then boom. And there's the manipulation in there, and you could take, you should look to take a long, and obviously you've got that big old range. Be pretty nice if it traded across it. So yeah, this is just the type of analysis that I do for myself, you know, when I'm looking for a potential manipulation. None of us know whether a manipulation will turn into a manipulation or not. We just know that the conditions for one to exist are present, whether or not it works or not, you know, because obviously sometimes the market does indeed, you know, follow through and there was never a manipulation, you don't take the trade. But thinking ahead, right, just thinking how it usually presents itself, the thing about manipulation is it's always the same. It just looks a little different every time, and that's a good thing because that keeps people off the scent, right? This whole process allows something big to do some buying in the face of all of that selling, and you know, you can anticipate it well in advance, and just do some practicing, get yourself some type of drawing tool, right, and put some, find yourself some levels and that are not manipulations yet, but that may turn into them, and just practice what that might look like and the different ways it could look, just so you get used to it, so that when you see it in real time, you know, you're going to be more comfortable. So I hope that helps, guys, and if you'd like to come and join me in my inner circle, so obviously you can learn this stuff in much more detail, then click on the link below. Take care. Happy Thanksgiving again, and if you're not in America, hope you have a good day too. Take care.